Good afternoon. We are doing it live right here. Mottek On Money, live on the air, right after Guy Benson. And just before the 790 KBC News Blitz with Randy Wang at 5, Mottek On Money, live on the air and 790 KBC, streaming live online worldwide at kbc.com. And you're on demand. Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. The market's winning streak continued today with the Dow up another 300 points, settling at 40,528. The S&P 500 up 32 points at 5,561. The Nasdaq gained 95 at 17,461. Stocks closing out President Trump's first 100 days back in the Oval Office. Today marks the 100th day of the president's second term, posting its worst first 100-day performance for a new administration in more than 50 years. Taking a look at as the dust has settled now, after 100 days, the Dow has tumbled 7.3% since Inauguration Day on January 20th. The Dow down 6.8% in the same period, though both were well off the lows seen earlier this month. The blue chip index seeing its worst first 100 days since President Nixon's second term in 1973. We'll take a closer look at the market in the first 100 days of the Trump administration and what might be ahead. We'll be speaking live in just a moment with Gabriel Wisdom, Managing Director at American Money Management and author of Wisdom on Value Investing. President Trump spelling out his accomplishments over the past 100 days, including lower inflation on a lot of things, including gasoline prices, which you noted are $1.98 a gallon in some states, of course not here in California. The price of oil right now is hovering just above $60 a barrel. Gold has seen quite a run in the last couple of months, hitting a record high above $3,500 an ounce, right now hovering at around $3,327 an ounce. Silver is just above $33 an ounce. Today, the volatility index, the VIX index, pulled back 4%. Stocks held up in the weeks after the president's inauguration, with the S&P 500 at one point posting its strongest start to a presidential term since 2013. Not even concerns that the Chinese startup DeepSeek could challenge American dominance in the AI race were enough to derail the stock rally early in the year. Of course, tariff uncertainty, along with the widespread federal job cuts and the push to deport undocumented immigrants, have been rattling the markets, plunging the Nasdaq into bear market territory and pushing the S&P 500 and Dow into correction territory. We have seen a rebound over the past 5-6 sessions now. With the first 100 days in the books, of course, investors want to know what might be ahead. We'll talk more about that in just a moment. Also, tariffs impacting port activity and business activity overall here in Southern California. We'll get an update on that later this hour from Mark Wilbur with Employers Group, also former Associate Dean of the USC Marshall School of Business, as well as one of the founding members and former chairman of the Los Angeles Business Federation. University endowments under scrutiny these days. I'll talk about that with Scott HODGE, former Tax Foundation president, as well as a Ventures scholar. Right now, we want to get the latest on your money, the markets, and the economy, and I believe we have on the line now Gabriel Wisdom, Managing Director of American Money Management and author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for joining us live here this afternoon.
Well, Frank, my pleasure. You know, it's going to take some time before we see real benefits from pro-market policies of this administration anyway. Deregulation, infrastructure, permitting, and spending cuts. These all ought to be positives, but in the short run, everybody's worried about the uncertainty associated with tariffs, and the scorecard is here. It's a terrible stock and economic performance for the first 100 days, but this isn't too unusual. I know you cited the data going back to President Nixon's second term when we had the Watergate controversy, but there's nothing like that right now. Post-election years are almost always, going back to 1896, the past 120 plus years, the first year of a new four-year term is almost always lackluster, and usually it's bad because the incumbent legislates, and that means somebody is losing and somebody on the other side is winning, and it's very disruptive. You see lower returns in post-election years. There are exceptions. The S&P 500 actually improved when Donald Trump was first elected. Trump won Barack Obama's first year, and George W. Bush, when he began his term, the market acted pretty well. But in general, first year of a 4-year term, the economy, the markets, they suffer.
On there live with Gabriel Wisdom, Managing Director at American Money Management, which happens to be based here in Southern California, also author of Wisdom on Value Investing. The good news is we've just seen a pretty good winning streak here with the Dow and S&P 500 extending its winning streak. The NASDAQ also finishing higher today. The S&P 500 up for the 6th session in a row, but posting its worst 100 days under Trump's second term since President Nixon back in 1973. That's the headline people are looking at this afternoon. And of course, earnings also in focus today, again, with General Motors out with its earnings news. And it looks like they have had a bombshell announcement today. GM suspending its earnings guidance and freezing a share buyback on tariff concerns. Looks like other companies might be doing this as well. Gabriel Wisdom, what's your reaction to the GM news that we got first thing this morning?
Well, that's the fallout from all the uncertainty surrounding tariffs. General Motors doesn't really know what the future holds, so they're holding off on making any predictions. They're holding off on buying capital equipment and even new hires. And this is what's occurring in many of the Fortune 500 companies. So earnings will likely be disappointing, or we won't hear much about earnings. 44% of the 500 biggest companies have reported earnings so far. So we're sort of in the early middles. But one thing that's very, very positive, Frank, is, and you remember Marty Zweig from Wall Street with Louis Rukeyser. You probably knew Marty Zweig. Well, he's come up a lot since last Thursday, because the New York Stock Exchange completed something called a Zweig thrust, or a Zweig breast thrust, which measures the number of rising stocks as opposed to the number of declining stocks. And when rising stocks move from 40% of the market to more than 61% within a very short period, this happened within a 10-day period, this rare occurrence has only happened 19 times in the last 80 years. And in every single instance of the Zweig thrust, since Marty first identified this thing, the market had a very solid year, up respectively, and the average has, for the 6 months following the thrust, was about 15%, and the 12-month returns were around 23% after these signals. So we're all paying attention to it. And it's sort of like being a geologist. You can't see what's beneath the ground, but you get a pretty good idea of what's going on.
On there live with Gabriel Wisdom, let's take a look at the Magnificent One, which has taken a hit this year. NVIDIA right now at 109 and change, moving up slightly today. Apple, which will have its earnings report later this week. It'll be interesting to follow that one. That'll be, I believe, on Thursday afternoon. Apple today up $1.07 at 211 and change. What about these big names?
Well, NVIDIA is now broadening. They're involved in some new disruptive technologies. They've been laying the groundwork to move beyond chip manufacturing. They've made a number of acquisitions in new technologies. And I think this is where they'll be spending a good deal of their free cash flow. So they're laying the groundwork to move beyond chip manufacturing. They're getting involved in artificial intelligence ventures and, of course, servers. So, you buy when everyone's complaining and sell when they're celebrating. Everybody's complaining about NVIDIA, and it seems to be concerns about China. With regard to Apple, this stock looks interesting, at least to the world's most successful investor, Warren Buffett. It's still his top holding. Apple, he's got $60.2 billion worth of Apple stock. The number two position in the Berkshire Hathaway portfolio is American Express at $38 billion and Bank of America at $25 billion. Coca-Cola, 29 billion, Chevron at 16 billion, and Berkshire Hathaway is one of the safe havens in this market. So, and he's holding a record amount of cash, at least for a public company, $325 billion in cash, and still doing well compared to the broad market.
All right. What about gold here, hitting record highs over the last several months now, above 3,500. Right now it's hovering around 3,300, 3,327 at last check. And silver also along for the ride here right now, hovering just above $33 an ounce. This as the dollar has taken a pretty big hit in the last several months in the face of the tariff uncertainty. What do you see ahead for the precious metals here now?
You know, gold and silver, Frank, are getting harder to find. When the miners do find it, they have to spend a lot of money on human labor and heavy machinery. And then there's the political instability and environmental regulations and other factors that make it more expensive and challenging to mine both gold and silver. That's one of the reasons why I think central banks are requiring it. I think it's why gold is shining now. Some of this gold that's in the earth is impossible to extract. There's gold buried under mountains and underwater in the middle of the ocean, for example, and we'll probably never get that. It's limited supply and a fair amount of utility, certainly for jewelry and industrial applications for silver. So I like them both.
All right, of course, Bitcoin at a record high earlier this year under the Trump administration, then pulled back, and now it's back up to around 94,000 here. Are you following the cryptos and any thoughts on what's happening in that space?
You know, Frank, I am following Bitcoin, certainly, because it's it's the one to follow. There's a finite supply, like gold. You can't make jewelry with crypto, but the total number of Bitcoins that could be mined is about 21 million units, if I understand it correctly. And the miners for Bitcoin have, they're having trouble. The pace of finding new Bitcoins has declined progressively. There's an algorithm that controls the mining of Bitcoin and other cryptos, but in particular, the big one, Bitcoin. And there's just not enough of it to go around. Will it be a real currency someday? I suppose for Venezuela, but they're also using the dollar and they're using commodities. So yeah, it's acting pretty well.
And now, of course, more in the mainstream with this ETF or various ETFs and Ethereum ETFs, and now XRP ETFs as well. Have you had a chance to take a look at that one?
You know, I have not, but I do know that there are new regulatory crackdowns by governments around the world that could pose a threat to a number of other cryptocurrencies. That might include Bitcoin. So, the political uncertainty here is something to pay attention to. And, cryptocurrencies and Bitcoin pose a threat to central governments around the world. You want to control the flow of your currency. You can't really do that with crypto.
On there live with Gabriel Wisdom with American Money Management. And President today trumpeting the fact that oil has plunged since he's been in office. So consumers getting a break in some states, not California, with the price of gas coming down here. Here it seems to be going up, actually, as the oil prices have come down. Oil now at $60 and change despite the upheaval in the Middle East and ongoing talks now with Iran over its nuclear program. What do you see ahead on the energy front here now?
About 8 countries so far have increased production. These are 8 of the big producers, including Saudi Arabia. So that's a huge positive for those of us who consume, traditional energy, and that's just about everybody, whether we know it or not. Even the plastic pen you might be writing with was made from petrochemicals. So, and then thanks to the advent of fracking, the U.S. is a net exporter of oil and natural gas, but there's a global excess capacity right now. And if the economy is slowing down here and around the world, why we'll see lower prices.
All right. And what about this Sell America idea in the face of all this uncertainty? We see some of the markets in Europe hitting record highs recently. And, of course, China back in focus, too, with their economy. And looks like activity between the ports of L.A. and Long Beach and China pretty much ground to a halt at this point. What do you see on those fronts and investment opportunities in the face of all that?
There are a number of disconnects here in the United States and around the world. For example, the stock market in China has been going up. It's had a great year to date. The markets in Mexico, Europe, and Canada have been going higher, while our U.S. markets have been sort of flatlining and struggling. Even the currencies of those countries have shown some strength. So, I think it's temporary, but it is concerning. With regard to China, you have to wonder who really wins the tariff trade war with China. I'm not sure it's the U.S. China's main customer is the bloc of 10 countries in the Southeast Asian nations. And then you've got the European Union, that's number 2. And finally, the U.S. is now only China's number 3 market. I think we've got to be careful with regard to China. We want to make a good deal with China, but be careful not to alienate them entirely. They can wait us out.
All right, it's fun to figure all this out. We're told repeatedly that the stock market is a forward-looking mechanism. We have seen 6 winners in a row now for the major averages for the Dow and the S&P 500. What is the market seeing here? Is it seeing a recession? And if so, why is it moving higher the last week or so?
We've said it's a forward-looking mechanism. It looks out about 6 months. I believe we have a rolling recession right now in certain industries. And the only reason why the numbers look pretty good, when they come out tomorrow, the gross domestic product numbers will reflect this rush to beat the tariffs. And I think that's quite temporary. Now, does it really matter who is president for the stock market to do well? History shows that neither party or party affiliation has any direct effect on the performance of stocks, but the policies of the current administration or any administration, those do matter. And the policies of the Federal Reserve impact the performance of the stock market and the economy clearly. So what do I see going from here?
This is Women's Work with Nicole Khalil.
I would rather have the temporary pain of discomfort than the avoidable pain of regret. There are too many of us that we're waiting for someday, and the clock is ticking.
Redefining what it means to be doing women's work.
Make sense of this wild, chaotic, and beautiful world and your place in it. That is woman's work.
This is Women's Work from Believe. Follow and listen on your favorite platform.
It could be said that the stock market and market performance has a much bigger influence on who's going to be president and who's going to win in the elections coming up next year, rather than the other way around. So I expect we'll see some easing on this tariff pressure and more pro-market policies. The Trump administration wants to restore or extend the 100% bonus depreciation measures, for example, that are in the Tax Cuts and Jobs Act of 2017. They want to restore or extend some of the other benefits. That's all big positive, Frank.
All right, and we got the jobs report coming out on Friday, the big enchilada, the monthly economic reports. It's a pretty thick week as far as economic reports are concerned. As you mentioned, the GDP report tomorrow and so forth, and the earnings parade continuing. What do you expect on Friday? Are we going to see more weakening on the job front, or do you see jobs holding up in all this?
I think we'll see more weakness, with the dollar tumbling in value and recession odds growing, and corporations want some clarity on tariffs. They're not committing on buying new capital equipment. They're not committing on adding jobs. If anything, they're reducing their payrolls and cutting back. So I don't expect to see a very rosy report. But you never make money buying into a very rosy assumption about anything. So I think this presents great opportunity for companies, for individuals. We just have to get through the next few months.
All right, last but not least, any specific places where you are putting money now and or taking it off the table?
Well, I mentioned those top holdings in the Berkshire Hathaway portfolio. Buffett's got Apple, American Express, Bank of America, Coca-Cola, Chevron. These stocks, with the exception of Apple, didn't do very well the last couple of years, but they're doing just fine now. And then Berkshire Hathaway's cash holdings are at a record of $325 billion. And by the way, Frank, that's more than the combined cash reserves of Apple, Microsoft, Alphabet, Amazon, and NVIDIA combined. And those companies are all some 14 times the size of Berkshire Hathaway by market capitalization. I saw this somewhere, maybe on Yahoo Finance, but I think Berkshire Hathaway looks interesting here, and those particular holdings have been underwater or at least they haven't been acquired by institutions for some time. On a regular basis, they are now. So I like those. And then the defense stocks. The European Union has been acquiring arms of various kinds. So I like a number of the defense players. Lockheed Martin would be one I look at. And then there's a hidden dividend on cruise line stocks. These have been very, very soft. If you own 100 shares of Carnival Cruises or Norwegian Cruise Lines or Royal Caribbean, you get other perks. I think those are worth a look here.
All right, investment expert Gabriel Wisdom, Managing Director at American Money Management and author of Wisdom on Value Investing. Gabriel, always great to have you with us. Thank you very much for your thoughtful analysis as always, and look forward to speaking with you again very, very soon. Gabriel Wisdom, live with us here on Mottek On Money on 790 KBC. Mottek On Money continues, 790 KBC. Good afternoon. Treasury Secretary Bessent lightening the mood today, saying President Trump was making more progress toward trade deals and a new tax bill. And that helped the market close higher today. The Dow up 300 points, S&P 500 of 32, the NASDAQ of 95. The yield in the 10-year note at 4.18%. The VIX index, the volatility index, down 4%. Gold hovering at 3,327 an ounce. Silver at 33.19 an ounce. Berkshire Hathaway Class A shares, mentioned just a moment ago by Gabriel Wisdom, that happens to be the most expensive stock on the New York Stock Exchange, moving up $3,590 today at $101,340. And Berkshire Hathaway Class B shares a bit more affordable, up nearly $4 at $534 and change. Checking the cryptos now, we see a Bitcoin taking a wild ride, down about 1,100 now, back to 94,200. Ethereum at 1,794, and Doge at the moment at 17 cents. And now the latest news in 790 KBC. Mottek On Money continues here at 790 KBC. A bit of a ray of sunshine on Wall Street again today with the Dow closing of 300, the S&P 500 of 32. We got a winning streak here, the best since November, 6 days in a row now, except for the NASDAQ, which did have an update today, up 95 points. On Main Street, it's nervous time with shipments from China to the west coast of the U.S., including the ports of L.A. and Long Beach, expected to plunge next week as the impact of the president's tariffs leads the companies to cut their import orders. Today we heard from Gene Soroka, the executive director of the Port of Los Angeles. He was on CNBC today saying he expects incoming cargo volume to slide by more than a third next week compared with the same period last year. He was on CNBC this morning, also a frequent guest here on this show. Shipments from China make up about 45% of the business for the Port of L.A., though some transport companies will be looking to pick up goods at other points in Southeast Asia to try to fill up their ships, according to the director of the Port of Los Angeles. Following all this very closely, as well as the business mood here, joining us live now is Mark Wilbur, the current chairman of Employers Group, former chair and founding member of BizFed, former associate dean of the USC Marshall School of Business. Mark Wilbur, thank you very much for taking the call here this afternoon.
Thanks for having me on, Frank. Great to be back.
Great to have you with us here, and give us your reaction to tariff concerns. We got full-blown conferences on tariffs happening these days, and now a lot of concern about what's happening at the ports of L.A. and Long Beach because of all this tariff uncertainty and the week ahead. Give us your assessment of things here at the moment.
Yeah, there's a certain level of uncertainty that come with the tariffs. There's no question about it, especially when you do it in the fashion that President Trump did, where everybody got kind of shillelied in that process, and his big coming out party for tariffs. But the reality is that this is more of a negotiation tactic, Frank. It's not meant to be a long-term situation in any way, shape, or form. And and I think that's why while you see some initial volatility in the markets, I think that's where they've settled out. I think everybody's kind of sitting by their computers, just waiting for the announcement on what the deals are that are across the board. Not just China, but other countries as well. And I think it's I've seen Soroka's comments, and I've also taken a look at Long Beach, which also has a huge impact from China. If you combine those two ports together, it's the largest port on the planet. As far as goods movement, it's huge because it feeds and directly impacts a significant portion of America. You're talking like $500 billion, I think, in net impact economically.
You're live with Mark Wilbur. And Mark, of course, you attend a lot of the business conferences. The BizFed Institute had a big conference today. We did have Kevin Harbour on this program a week or so ago, and I know he was gearing up for the big discussions this week. And what's among the movers and shakers you're talking to here? Is it paralyzing things at the moment? When is the smoke going to clear?
Well, so I was actually I was in attendance at the Fire Summit today. Karen Bass, Mayor Karen Bass, dropped in, said the things you'd expect her to say, because they're in mid-process. I think she feels pretty good about where things are at and the speed in which things are being addressed. I know the administration, the Trump administration, has been helpful in many ways, and I know there's Steadfast LA with Rick Caruso. There's a lot of irons in the fire working on this, and I think they're making some progress. But as it relates to, she did say one thing about the shipping, the tariff situation. She said she had one person, tell her that we could have a situation where there's no ships in our ports. And I thought that was a little extreme and unnecessary because that's not realistic. In fact, your prior speaker, Mr. Wisdom, I think, commented about the group of 10 in Southeast Asia. But what people don't understand is that the reason why that has picked up into such a huge influence, Frank, is that a lot of manufacturing is now outsourced by China. I know people will have a hard time imagining that, because everybody kind of views China as the giant manufacturer and the cheapest place to do it. They're not the cheapest place anymore. There's other places like Vietnam and Cambodia and lots of other places that are less expensive and want the business. So it was, I actually think, a little inaccurate to say that that's a bigger partner to China. It is only because the finished goods are going there that then get shipped to America. So it's still it's kind of a mixed bag there, because the stuff that China is exchanging is industrial goods and unfinished goods that then get finished in those countries. So just a little bit of economic clarity on that one.
It's part sports.
We have football on the brain.
Part pop culture.
Dennis Leary. True or false? You refuse to wear a glove with Mickey Mantle's signature on it for the movie The Sandlot.
The Red Sox blood, the Bruins blood, they run deep.
And in the best celebrity interviews.
Robert De Niro here on The Rich Eisen Show. How are you, sir?
Just got over a 24-hour virus.
The antidote is to appear on The Rich Eisen Show.
There you go. I would have just done it earlier.
And you've got The Rich Eisen Show podcast.
There is a medicinal quality to appearing on this program.
Follow and listen on your favorite platform.
Very interesting. Any other big takeaways from that big summit on the firestorm recovery? And, of course, with the tariff situation in the background, a lot of concern about the cost of the recovery of materials and so forth, building materials and all of that. What's the assessment on how this rebuilding, this massive rebuilding in the Palisades and Altadena with these various efforts underway, how's it going so far?
Well, the one thing that really surfaced in the meeting that I was at today downtown is at ASU's California campus. I don't know if you've ever been there, Frank. It's the old LA Times buildings, beautiful place. Hearst actually, I think, was the original builder of that building way back when. But in any case, the reality is I was surprised to hear that you can only build up to like 110%. You can have a 10% increase in what you're rebuilding. But the truth is a lot of stuff that was built that was burned down was built like in the 50s, 60s, and 70s. And so, people want a little bit bigger closets. They want a little bit bigger rooms. They want, as long as it fits and it works. But you can't go over 10% without starting to hit. You can't take advantage of the rapid response and approval process. Apparently, if you get over 10%. Now, I might be misspeaking slightly on that, and because it was part of a broader discussion in the room, and there were several people speaking, but. That doesn't make sense to me, Frank. I think people, as long as they're able to build within the limits of their property and create a nice space, and especially if they can improve space that was built in the 60s and 70s, which doesn't have a lot of the attributes that we would look for in a modern home today, I hope that they increase that slightly or find a way to incorporate that a little bit easier for everybody involved.
Right. Another report that came out recently showed that the price of rental properties here in the Los Angeles area is leading the nation in the rate of increase now, more than 7%, in some places close to 10%. So we're watching that as well, adding to the affordability and availability situation here. So keeping an eye on that. Well, Mark, wish we had more time as always, but we'll have to stop there and look forward to your next update. Mark Wilbur, current chair of Employers Group. We got the jobs report coming out on Friday, too, so maybe we can get you back on to talk about that and get your update on the labor situation as well. Former chair, founding member of LA BizFed, former associate dean of the USC Marshall School of Business. Mark, thank you very much for joining us live here this afternoon.
Thanks, Frank. Always a pleasure.
Thanks very much. And we go out to the freeways now on 790 KABC. Mottek On Money continues here on 790 KABC. University endowments under scrutiny these days. Some colleges are risking their endowments as Congress takes aim. And let's talk about that now with Scott Hodge, former Tax Foundation president and Arnold Ventures scholar. Scott Hodge, thank you very much for taking the call here this afternoon.
Thank you, Frank. Great to be with you.
Wonderful to have you with us here. And this is a very big topic right now. Harvard certainly in focus. President Trump has suggested that the IRS could yank Harvard's tax exemption. What do we need to know about that and the other universities that are under the microscope now?
Well, Frank, a lot of these large university endowments have essentially become tax-exempt hedge funds. They collect tax-deductible donations from, alumni and so forth, and then they invest those and earn, in some cases, billions of dollars worth of investment income that is then not taxed in any way. Now, in 2017, Congress did enact a small tax on some of the largest endowments, but it's only 1.4%. And only 50 or 60 end up paying that tax. Now, by comparison, if you and I were to take money out of our 401k, for instance, we pay up to 37% in personal income taxes on that investment income. So we have this huge disparity in how investment income is taxed in America. Some organizations, like these nonprofits, pay no tax on their investment income or a small tax, while you and I may pay a large tax on our investment income. So what Congress is considering right now is increasing that tax that was passed in 2017 from 1.4% to as high as 21%, which would match the corporate tax rate. And so all of what they're doing is trying to think about how do we create parity in the way that investment income is taxed for different types of taxpayers.
It's very prominent investors, Bill Ackman among them, have pointed to anti-Semitism on many of the campuses, and that got a lot of attention, of course. And now under the Trump administration, the Department of Education announced it had sent letters to, I believe, 60 or so universities warning them of enforcement actions if they did not protect Jewish students on campus as stipulated under the law. Given the change of tone now under the Trump administration, Tell us what's going on the university campuses in response to those letters and the threat of enforcement actions and the threat, indeed, of pulling their funding.
Well, certainly many of them are banding together to try to stand up to or up against these actions by the White House. And, I to some degree, it's hard to be sympathetic to some of these big universities. Harvard has a $53 billion endowment. Yale has a $41 billion endowment. Stanford has a $38 billion endowment. These are huge investment funds that ought to be going toward programs and student scholarships. And yet when we look at the data, Frank, we find out that many of these endowments are making 10% annually on their investments, but paying out less than 5% toward student scholarships and overhead. And so really what they're doing is they're investing a lot, pocketing at least half of that income, and not applying all of that toward improving the quality of education on campus. And so, here they're complaining about having some of their funding cut by the federal government, but they're not using all of the resources that they have at their disposal. So I think they need to look inward a little bit and take stock of how they're using the resources that they have.
On the air live with Scott Hodge, former Tax Foundation president and Arnold Ventures scholar. Tell us more about Arnold Ventures, by the way, and tell us about some of your other recommendations as it relates to university endowments.
Arnold Ventures is a philanthropy, and what we try to do is research evidence-based solutions to some of the big problems facing the federal government, whether it's trying to reduce the size and scope of the deficit and national debt, reform the tax code, fix the healthcare system, and higher education being one of those things that we're trying to find solutions for, to try to bring some of the costs down for these things that are spiraling out of the affordability of most middle-class Americans. And one of the ways that you can do this is to require universities to pay more of their endowments toward the costs of providing that education. It's interesting that private foundations have to pay out at least 5% of their assets every year toward charitable activities, but university endowments don't have to do that. And so if you were to create some parity there, requiring the university endowments to at least pay out 5% of their assets toward the classroom, I think that you could bring down some of the costs that are now being forced upon students and their parents.
Scott, thank you very much for sharing those insights with us. The website, by the way, is arnoldventures.org. If you want to follow their research, that is Scott Hodge, former Tax Foundation president and Arnold Ventures scholar. Scott, thank you very much for joining us live this afternoon.
Thank you, Frank. Great to be with you.
Thank you very much. And checking the stock market action today, we have a winner. The Dow up 300 points, settling at 40,528. The S&P 500 of 32 at 5,561. And the NASDAQ gaining 95 at 17,461. The yield in the 10-year note now at 4.18%. The VIX index pulling back 4% today. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here live on 790 KBC.
The Sean Ryan Show presents Peak Points. Get timeless inspiration from the very best of The Sean Ryan Show.
September 11th happens. What is the first thing that went through your head?
September 12th, I'm going back in the military.
Talk about being recruited by the cartel. How do you cope? Just learning how to find a new normal.
One of the most tragic events in American firefighter history.
You know what comes after.
You have this beautiful life. You have these horrible experiences, yes, but you can do something with them for the greater good.
The Sean Ryan Show Peak Points. Follow and listen on your favorite platform.